Oh, all right. Hello, everybody. Jeff Gibby here with Metastock. Hope you're doing well. Thanks for coming. Thanks for watching today. It's good to see you. If you're watching here on YouTube, make sure to hit the like and subscribe button. It helps a great deal. We appreciate it, regardless of whether you're watching, whether it's GoToWebinar or Metastock. Thanks for coming today. It's good to see you. So one thing before we get started, we have a great presentation lined up, two edges to change a week trade with Steve Primo. But one thing I would like to do before we get started, a little bit of a different data. Greg, who was running the YouTubes and doing the introductions, has been in a play of Metastock for a number of years. He does a really, really good job. And I wanted to just kind of mention that it's his birthday today. So if you're watching in YouTube, what I'd like you to do is go ahead and just say happy birthday, Greg, and say that in the chat. But happy birthday, Greg. I think he turned 62 today, Thanks. If I remember our conversation from yesterday. Happy birthday, Greg. So anyway.
Oh, thank you for making me feel special. I appreciate that.
All right.
Now get off my lawn and turn down that music.
All right. So let's get on with the legal disclaimer. Anyway, today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Our guest today is Steve Primo. Steve started trading on the Pacific Stock Exchange, and he's been trading for decades. He's going to show you one of the lessons that he learned in trading early on that he's been using literally for, I think, 40 years is what he's talking about. It's a method that he's taught and talked about ever since I met him, and he does a really good job with it. So I hope I hope you enjoy it. It's good to have him in here. And Steve, welcome to the room. Hi, Steve. Can we hear you?
Hey, Jeff. Hi, I'm here. Yes.
All right, great. Okay, cool. I didn't hear you initially. Let me go ahead and make you the presenter.
Okay.
Now make sure we can see the screen, and then I'll kind of get out of the way. So.
Okay, here we go. Great. Thank you, Jeff. Thank you very much for that intro, and thanks everyone for showing up today. I really appreciate it because this promises to be a great educational presentation. Today, I want to talk to you about two edges that really will change the way you trade. And I say that from firsthand experience because they've changed the way I trade. And I think they're at the cornerstone of what has sustained me now going over 4 decades. For example, let's take a look at this chart in AVGO, Broadcom, okay? Most traders just right offhand would look at this chart and say, well, not really much happening here, right? Kind of in a whipsaw market actually, where you buy and it goes down, you sell and it goes up. So we've always been taught to stay away from kind of whipsaw markets or non-ranging markets. This is really not something that's advantageous to really being successful in trading. Well, here's the difference. With the two edges I'm going to be teaching you today, the very first edge would have identified the overall trend. And in this case, it's telling you that the overall trend is up. Even though it looks like you're going sideways, the overall trend is up. And the second edge I'm going to teach you today confirmed that the short-term trend was also up. So now looking at this chart once again, we know now, just by what I'll teach you later on, that the overall and the short-term trend are up. And just a matter of days, actually months should say, the stock went up 300 points, okay? Now, here's the good thing about this. These two edges form one of our most consistent methods. In fact, they make up 2 of the rules of one of our most consistent methods, and they generated signals right here, a total of 5 signals, while it looked as if the market was going nowhere. So this is what we're going to be talking about today, these 2 edges that can change the way you trade because they are the very cornerstone of one of our most consistent methods. That's strategy number 4. So welcome to this educational presentation. We're going to be talking about the momentum pullback trading strategy, strategy number 4. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading now for 46 years. As Jeff mentioned, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist doesn't mean you're any more special than anyone else. It just means that in the old days, if you ever Google those pictures of the guys on the trading floor making these weird hand signals, with a lot of paper on the floor. Well, those were the traders who specialized in making a market in roughly about 50 or 60 stocks. So if you wanted to purchase or sell a particular issue, you'd call your floor broker, and he in turn would walk up to the specialist who made a market in those particular equities. So I did that for 9 years. I was a specialist in stocks like IBM, US Air, Waste Management. I made markets during the crash of 1987 and the bull market that followed. So in my total of 46 years of trading experience, I've seen and traded just about every market environment there is, every system, every trading method. So I know what works in terms of consistency, and I know what doesn't work. So that's why I formulated Specialist Trading with one goal in mind as an educational company, simply to educate traders with things that really have stood the test of time so that they can make their own trading decisions, so they can be in charge of their own trading destiny. And you'll see that in today's educational presentation. Now, before we begin, we have to show our disclaimer as well. So please take a moment to view it. I'm going to share with you a lot of performance results using these two edges. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, since we are an educational company, we also provide education on a daily basis. If you'd like to follow us on Twitter, there's our handle right there. Every day I post anywhere from 3 to 5 postings of snapshots of signals that our methods or techniques or strategies have generated, and also little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, as I stated, we are a little bit different from other educational sources. In fact, that really our only focus is on educating you. Therefore, we don't believe in telling you what we think the market's going to do. We don't believe in telling you what the perfect time frame is or the perfect issue or market is to trade. That's up to you to decide. The one thing I've learned in 46 years of trading is that the only traders that are still consistent, the ones that are still trading, believe it or not, I started out my career in a room on the floor with roughly about 300 or 400 traders, and I don't think one of them is still trading. The only thing that will sustain you is by making your own trading decisions, okay? And so that's what I provide. That's the service we provide at Specialist Trading. We give you techniques, methods, tips, strategies to really educate you so that ultimately you can make your own trading decisions. In my opinion, that's the only way one becomes consistent. So my goal as an educator is not to trade for you, but to teach you how to trade, okay? So with that stated, let's begin today's educational presentation. I like to always start out my classes with something that my mentors said to me. When I was struggling tremendously, I had mentors on the floor who were specialists themselves, and they saw how much I was struggling, and these are things that they told me. And I remember one of the first things they said was, and this is the theme of the day, Steve, if you think about it, trading is really simple. It really is. It's the individual trader who makes it more difficult than it has to be. I mean, think about it. You can make your trading as complicated as you want. In fact, we've always been taught that the more complicated something is, the more rules, the more different intricacies, actually the more valid it will be, right? And the more successful. Well, if there's one thing I've learned in 46 years, it's actually the opposite. It's when you keep things as simple as possible, that's when you get onto that road to consistency. Now, here's the good news. The two edges I'm going to share with you today are extremely simple. In fact, you'll look at them and say, there's no way they can be this consistent. They're too easy. But remember, once again, I've been using them in my own personal trading for the past 4 decades. So hopefully you'll be able to transfer them onto your trade. Okay, we're going to be talking about a strategy that I hold near and dear to my heart. It's the very first strategy I learned. It was taught to me by my mentors. This is strategy number 4. And this contains these two edges that I'm going to be sharing with you today, the first 2 rules of strategy 4. So let me share with you some of the highlights of this particular method. It's a pattern recognition strategy, all right? This means that we're not really relying on indicators or lines to cross or different, systematic behavior, looking at different indicators or things of that nature. We're just looking at a specific pattern that happens in these markets. Now, this pattern occurs over and over and over again. Now, it's designed for traders looking to catch momentum. When I first applied this to my trading on the floor of the exchange, I was using it on 1-minute bars, and I was getting in and out in a matter of moments because it was catching momentum that quickly. but we know that not everyone trades that way. So we've developed ways in which to hold on to positions for days, weeks, even months. The main thing I want to stress to you is that it's designed to catch momentum and find this and identify this momentum, oftentimes before it looks as if there's any momentum even at all available. And then lastly, you can apply this to all markets and timeframes. And the majority of examples I'll be sharing with you today, the snapshots come from stocks, but trust me, you can use it on futures, on currency pairs, on crypto, Bitcoin. It really makes no difference, and it doesn't make any difference what time frame either. Wherever this pattern is identified, strategy 4 will generate a signal. Now, the advantages to trading strategy 4, one, it's extremely consistent. And I know a lot of you think when someone says something's consistent, it means that it has a lot of winners, right? It just continues to win and win and win. That's not really the definition of consistency. You see, consistency is a 2 steps forward, 1 step back approach. It's an awareness that you will have losses from time to time. That's okay. But a consistent method is one that's able to recoup the loss. And that's what you really want. There are, thousands and thousands of strategies or systems where they hit these big home runs and make tons of money in 1 or 2 trades, but the majority of them give it all back within a matter of days or even weeks. And that's not a consistent method. That's more of a gambling type of issue. What you want is something that has a nice, steady upward slope in its P&L. And that's what a consistent method is. Number 2, strategy 4 makes you a part of the process. Now, this goes into our educational philosophy. The reason why we call it a strategy and not a system is because even though a system is rule-based and a strategy is rule-based, a strategy is only about 70% rule-based, which leaves about 30% for discretion. So that discretion is what makes you a part of the process, okay? So let's say you are trading that day and you get a strategy number 4 signal, and you say to yourself, well, this looks familiar. The last time I saw a signal like this stock really took off. So we share with you and teach you the different ways in which to alter and edit to become a part of the process so you can take advantage of that different market environment. You see, it goes against our philosophy for everyone to trade the exact same way each and every time, because we know no 2 traders are alike. Some traders have very small risk parameters, others have huge risk parameters. Some traders like to trade 1 million times a day, the way I used to on the floor. Others like to trade once a month. So everyone comes in with different ways in which to trade, different personas, okay? And that's fine. That's what we encourage. We want you to trade towards your means. No 2 traders should ever trade alike. So this is what makes you a part of the process. The good news is, in the course, we provide our students with all these different variables so that you can take advantage of them, so that you can help you make your own decisions. And then lastly, strategy number 4 is designed to be as simple as possible. There's actually only 5 rules to the method, and I'm giving you the first 2, believe it or not, okay? It's extremely simple. It's very easy. Once you have it figured out and you know exactly what's behind this pattern, it's very easy to spot these setups over and over and over again. So let's talk about these first 2 edges, okay? That will, in my opinion, change the way you trade, because they're the very first 2 rules of strategy number 4. We usually don't give these away, but I'm giving you today to all the people today for taking your time out to come to this presentation. All right, here's rules 1 and 2 for buy setups. Rule number 1, the price bar must close above the 50-period simple moving average. That's it, okay? Now, as you see here, the entire price bar is above the 50-period moving average, but it doesn't have to be. It can open below, but as long as it closes above. If you get a series or consecutive bars that are closing above the 50-period moving average, the market is telling you, not some guy in a chat room, not some guy on TV, the market, the very source of what you're trading, is telling you the overall trend is up. It's that simple. Now, rule number 2, you want to find a price bar that closes in the top 25% of its range. Okay, what does that mean? Well, if we look at this generic bar here, all right, here's the midway, halfway point. We want to close in this top 25 percentile right here. If we do that and we are above the 50-period moving average, it's telling us that the short-term trend is also up. So now you see how simple we've made things for you. You don't have to look at 2 different time frames, 2 different charts, an hourly time frame and a daily bar time frame. It's simple. If price is above the 50, the overall trend is up. If it closes in the top 25% of its range above the 50, the short-term trend is up. That's all you need to know. And these are the first two setup rules for a buy signal in strategy number 4. Now, conversely, if we're looking to sell, well, they're the same thing, they're just turned upside down. Rule number 1, if we're looking to go short or to sell, price bar must close below the 50. It's okay if it opens above, but it must close below the 50. This automatically tells us that the overall trend is down. If we see a series of bars closing below the 50, the overall trend is down. And then secondly, rule number 2, price bar closes in the bottom 25% of its range. If it does that, it's telling us that the short-term trend is down. So now we have the two things in sync together. Once again, keeping trading simple. No reason to overcomplicate things by looking at a number of charts, different time frames, moving average crossovers. Keep things simple in order to become a consistent trader. These are the very first rules of strategy number 4. Now let me share with you some recent strategy number 4 examples, and you'll see these two rules in action. You'll see the closes above the 50, and in the top 25% for buy signals, you'll see the closes below the 50 period moving average, and in the bottom 25% for sell signals, okay? These are the first two edges that changed the way I trade, and hopefully they'll be able to do the same for you. All right, let's look at this example now in MAR, Marriott. Okay, we're going up, then it goes straight down, then it starts to go back up again. Wow, okay, which direction does this want to go? Well, what's the first thing we do? First thing we do is apply the 50 period moving average. Now at this point, the overall trend was down. But once we had a couple of closes above, now we know the overall trend is up. But that is not enough to tell us that we should just simply buy at the market. We want to also find out what the short-term trend is. Now we have a number of bars here that close in the top 25%. But remember, what we're looking for are those first two rules combined with the last 3 that make up this pattern. That will generate a strategy number 4 buy signal. And guess what? We had one right here, okay? Right here on this bar, closed above and in the top 25%. Even though it opened below, that's okay. And look what happened in the next 3 days. Stock gapped up or jumped up 10 points, okay? It's as simple as that. Really don't have to overcomplicate things. Let's look at an example here in MU, Micron, okay? Wow, this is a difficult one to figure out. Let's say you like to watch what the banks or the big money is doing. You say to yourself, hey, there's resistance here because the institutions, that $20,000 program I bought or subscribed to is telling me the institutions are selling here, okay? You say, I'm not gonna do anything until we have a strong breakout above that, because every time it gets up to that resistance level, it sells off. In fact, if I'm more aggressive, I may even want to short here to think it's going to go down. Okay, this is the way most traders trade, based off a decision, based off what someone else is saying. What is the market telling you? The very thing we're trading. Well, the first thing we do is apply the 50 period moving average. And the majority of price is closing above. So even though you may think that there's resistance there, well, guess what? The market, not some bank or not some big institution, but the market is telling you, you should be looking at me from an overall upward trend because price is above the 50. And now we want to look for bars that close in the top 25% to find out that the short-term trend is also in sync. And we have a number of bars that are closing in the top 25%. Here, 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 here. So it's telling us that the overall trend and the short-term trend are in sync. So rules 1 and 2 are met. But now we have to fulfill the remaining requirements to find a signal. And we had actually 3 at the lower range right here. So there's no reason to wait for some type of breakout. Remember, we only teach our students things that have stood the test of time, things that have high levels of consistency. And I've never found any level of consistency trading off the institutions. In fact, when I was on the floor, I used to trade with the institutions. They used to enter orders in my book in stocks I had, sometimes for huge amounts, 1 million shares. And I have to tell you, just my own personal view, they had some of the lowest levels of consistency of any trader I ever dealt with or any trading institution. They were most of the time wrong, or they would cancel their order and get out of the way. So I would never base anything off an institution. I would base off what the market's telling me. And the market generated 3 buy signals right here and 15 points, okay? You didn't have to wait for any type of breakout above an institution, a so-called institution. You simply could have bought there and potentially captured 15 points. All right, we're looking at a chart here on ISRG, Intuitive Surgical. All right, we're looking at this, and obviously in hindsight, it's been going up. But how could we have known that, let's say back here, all right? Because this, it's a little bit too late to find out that it's going up. We wanted to know back here. Well, simple as applying the 50-period moving average, right? Price is above the 50 for a long time, so we knew that the overall trend was up. We see a number of bars here that close in the top 25%. If we combine that with the remaining rules of strategy 4, look at all the buy setups we had here that gave us chances to go long and potentially capture 20 points. Let's look at the AEP, American Electric, okay? Once again, someone looking at this would say, well, Steve, that system I have says that there's major support here, and I don't want to, do anything until, either breaks that support or it takes off to the upside. Once again, this is an example of the way I used to trade. I used to trade based off these same assumptions, so I'd wait for the market or someone to tell me what to do. Well, you don't have to do that once you simplify your trading, because if we apply the 50-period moving average, we see that it's hovering above and below. But look at this bar. It opened above but closed below in the bottom 25%, and it did meet the remaining requirements of strategy 4. So a strategy 4 sell signal was generated here. And look what happened right off the bat. It fell 10 points. There's no reason to look at support or resistance. In fact, we don't teach that at specialist trading because it's very subjective. One person's support is another trader's resistance. It's much better just to look at what the market's telling you on the chart. And if you missed that one signal, the market gave you another signal right here in the pattern. Now, here's a look at Amazon. Now, this was a couple of months ago. Now, looking at this chart, someone could say, wow, there's no clear direction. We were going up, but now we're going straight down. So I don't know what this stock wants to do, right? Not necessarily. That's the traditional way of looking at things. If you know how to view what the overall trend is, all you have to do is apply the 50-period moving average. And it's telling you that any sell-off should be viewed upon as a buying opportunity because we're above the 50. We should not look for selling of any kind. Okay. Now, we also see that strategy 4 generated a buy signal here. We closed above the 50 and in the top 25%. The remaining rules of the strategy were met. And look what happened, 23 points, okay? Now, obviously, most traders would say, well, how did you know that? Was there some good news or the market took off? Well, it's funny how this was generated right at the very low of that sell-off. All right, let's look at PayPal. Another example of a range market, right? Something you don't want to be involved in, something that you want to stay away from, because this is where you get whipsawed. You buy, it goes down, you sell, it goes up, all right? But is it really a range market? All we do is apply the 50-period moving average. We see that the majority of bars are below. We have a couple of bouncing up above, but then it quickly goes right back down to below. And then we see bars closing in the bottom 25%. And we look for the rules of strategy 4, and guess what? Look at all these sell signals. So you may be thinking you're in a range sideways market, but the market is actually, once you know these simple two edges, it's screaming that it wants to go lower, all right? Even though it looks as if going sideways and building a base, it is screaming to sell. And look what happened. It fell 13 points in the next week. And if you miss those signals, guess what? It generated some more along the way. All right, let's look at the Japanese yen because I want to share with you an example of an entirely different market that has nothing to do with stocks, just to share with you how this pattern can be repeated in any market and in any time frame. Once again, not a clear direction of what the Japanese yen wants to do here, but once we apply the 50-period moving average, well, now we know that the overall trend is up. So that means we should only look at this from a buyer's perspective. But it doesn't mean just to jump and buy at the market. We have some more structure that we need. So we want to look for a bar that closes in the top 25%. And then we want to find that the remaining rules of the strategy are met. And guess what? It gave us two opportunities, right here and right here, to buy. And just off these two signals, had you held on to them and bought them, you could have potentially captured over 500 pips coming into June. All right, let's look at GFS, Global Founder. Now, this is a perfect example of what we mean by consistency. Remember, consistency does not mean that, oh, it makes tons of winning trades. That's not what consistency means. Consistency is a 2 steps forward, 1 step back approach. Basically, it's awareness that you will have losses, but it's a confidence in knowing that you're able to recoup those losses. For example, a buy signal was generated here in GFS. All right, we're above the 50, meets all the standard rules. We close in the top 25%. The remaining requirements are met. So let's say you buy this and you go long, and it's not really working out. You say to yourself, wow, okay, well, I'm not stopped out yet, but wow, it's really not doing what it's supposed to do. And on top of that, guess what? We opened above and we closed below in the bottom 25%. And this is a more of aggressive, but still a valid sell signal. So this is what, after paper trading for a while, you could have decided, well, if this is a consistent method, I want to be able to recoup my losses. So let's say you decide to exit this with a loss, your buy setup, and you lose 3 points, okay? And you decide to go short now. So you reverse. Well, this is what we mean by consistency. You lost 3 points on the buy setup, but you potentially could have gained 13 points to the downside and more than made enough to make back that 3-point loss. So this is what you're looking for in a consistent method, not a method that hits home runs, because the methods that I've known in the past, that I've traded and that I've seen before, the ones that, there's a phrase, the brighter the sunshine, the darker the shadow, meaning that the bigger the wins, these big, humongous, home runs, the bigger the losses as well. You don't want a method like that. That's more of a gambling approach. Remember, we want a smooth upward slope in our P&L. Let's look at Netflix. This was just last month in May. Okay, we're above the 50-period moving average. We're looking for bars that close in the top 25%. Well, this one did, this one did, this one did, but only this one met the requirements for a strategy 4 buy setup. Okay, so let's see what happened. Let's say you bought that, or maybe you bought the options or some type of option spread. Any way you want to enter is entirely up to you. And look what happened the next day. You've got a nice profit. So you could either make the decision. Remember, our philosophy is you are in charge. So you could have exited and said, hey, that's great, I'm out. Or you could have seen that same day another signal was generated on that closing bar. So either you wanted to buy more or stay in the trade, because potentially you could have captured upwards of 100 points coming into mid-June. Let's look at TMUS, okay, T-Mobile. Another perfect example of kind of a nowhere market, just basically going sideways, right? You sell, it goes up, you buy, it goes down. So you're always taught to stay away from these markets. This is where you lose money. But are we really in a sideways market? If we apply the 50-period moving average, where is price? The majority is below. So what is the market? Not me, not some guy in a chat room, not some economic indicator, but what is the market telling you? It's telling you the overall trend is down. And if the overall trend is down, we do not want to be a buyer. So it's not, even though it may appear to be going sideways, it's got a negative overall bias. And we see a number of bars that close in the bottom 25%. So it's telling us that, wow, the short term and the longer overall trend are in sync to the downside. So now we're looking for a strategy for a sell signal. And guess what? We had two, one right here and one right here. This was coming into May, and it quickly dropped 15 points. Now, this was all without the aid of any news, any fundamental announcements, not having to go to a chat room or a trading room to find out what someone else likes, or not having to listen to someone on TV. Remember, our goal is to have you take charge of your trading destiny. We want you to make your own trading decisions. We have a number of students who years ago, had never been consistent, and they've ultimately became consistent traders. And every once in a while, every couple of years, we'll hear back from them. They either want to tune up or they'll say, hey, just want to thank you. I'm doing well now. And that's great. That's what we want. We don't want to have you always having to come back every week to find out what to do. We want you to go out on your own. Remember, our job as a mentor is to teach you how to trade, not to trade for you. Let's look at an example here in NVIDIA, NVDA, okay? Once again, this stock has taken off since the beginning of the year. It's gone straight up, right? In hindsight, sure, it's easy to see that this has been in an uptrend, but what if we could have found out back here that the overall trend was up? Wouldn't you have rather known back then? Well, sure, it would have been simple if you applied the 50-period moving average. We knew well in advance in December of 2022 that the overall trend was up. This was when it was trading roughly about 150, 160. So we knew that we should only look at this from a buyer's perspective. And there are a number of bars that close in the top 25%, telling us that the short-term trend is in sync. And if we applied those first two edges, those first two rules to the pattern, well, guess what? Look at all the setups you had and all the chances you had to buy. Had you taken the very first signal in January, you could have potentially captured 220 points, just holding on to that. I'm not saying all of our students made 220 points, but remember, it's up to you. Some students like to take a couple point gain and say, thank you, I'm out of this trade. Whereas others will say, hey, I'm in this for the long haul. The choice is entirely yours. It's your decision how you want to trade. The good news is we provide you with different ways to help you make those decisions. All right, here's an example of Moderna. Looking at this, we say, okay, well, yeah, this is a short-term downtrend. Obviously, it's going lower, but I'm a student of candlesticks, Steve, and guess what? Even though we have a downtrend, there is a bullish engulfing pattern right here. You always look for this reversal candlestick pattern at the bottom of a downtrend. So this is an extremely bullish setup. So Steve, I don't care what you say, I want to buy this because I'm a student of candlesticks, and this is a great sign here. So let's say you buy this, and for 3 days you're feeling really good about yourself. You say, see, Steve, I don't need all those things. Everything's fine. Okay. Well, sure. You can have a really nice setup to buy below the 50 period moving average, and a very great setup to sell above the 50, but those are far and few in between. In other words, it's kind of like using the slot machines in Vegas, all right? Sure, every once in a while you'll get a small little jackpot or a winning signal, and you'll say to yourself, hey, this is great. But if you stay there long enough, those are designed to have you give back all your money. It's the same way with buying below the 50 period moving average, because if we apply the 50 period moving average, we see that bullish engulfing pattern was below, and that doesn't have a high level of consistency. Sure, for 3 days you're looking good and you're holding on to your position thinking it's going to go much higher, but wouldn't you rather have noticed that you're below the 50 and you have a bar closing in the bottom 25% and it meets all the requirements of a sell signal? So rather than going long right here, you would have rather gone short or either sold your position, because look what happened after that. Had you gone long, you would have had to been quick. And this is what happened to so many traders. They'll trade something like a candlestick pattern or some magic system, and it'll look good for a while. And then when it falls out of bed, they say, wow, I guess it's not working. Well, let me buy some more and buy some more and buy some more. This is why most traders fail, because you're not listening to the market. You're listening to some outside source tell you what to do. Once you learn how to listen to the market, and the first two edges here, that's all they do, is they're telling you what the market wants to do, you really take your trading to new heights. Okay, let's look at another Forex example, the Canadian dollar, all right? Once again, in hindsight, it's easy to see this has been going lower, right? But how could we have known in advance, like way back here, that we wanted to go short or sell? We apply the 50 period moving average, and the market, not me, the market's telling you the overall trend is down, so don't buy me. The odds are going to be in your favor if you do not buy this, or if you go short, if you sell. If you apply the second rule of the edge to strategy 4, look at all the chances you could have had to go short. Now, this was a 4-hour chart of the Canadian dollar just a few weeks ago. You could have potentially captured over 200 pips in a matter of days. All right, let's look at that first chart we opened up the presentation with in AVGO, Broadcom. Remember, we're looking at this and we say, well, this is a kind of a whipsaw market. Remember, there's no way we can figure out what to do. I know it's an expensive $600 stock, but I was thinking about buying the calls or maybe some type of spread, and there's just no indication that it wants to do anything. So I'll wait for a breakout. Well, what's the first thing we teach our students? Apply the 50 period moving average. And we see that the majority of bars are closing above. Sure, we have a couple here, and we have even one that below that closes in the bottom 25%. But remember, we have to make sure that the remaining portions of the strategy are met. The requirements that are still left, the last 3 requirements in this pattern, are met. And if we do, we see that the only signals generated are buy signals: 1, 2, 3, 4, and 5. So even though the market looks like it's in a whipsaw, rangy environment, it's screaming, I want to go higher. And look what happened: 300 points in just 2 months. Okay, so this is what we mean by strategy 4, catching momentum. It was signaling that there's going to be some strong momentum to the upside prior to anything else being, mentioned, prior to any news announcement, prior to the market taking off, prior to some economic indicator, maybe jobless claims, maybe interest rates. It was telling you in advance. It's been my experience that the market tells you just about everything you need to know. The only trouble is we're never trained to listen to the market. I know I wasn't. I was trained to look at interest rates. I was trained on the floor to look at the jobless claims. I was trained to listen to the gurus on TV. We didn't have any chat rooms or trading rooms then. There wasn't even an internet, but we had lots of newsletters. And so I subscribed to all of them. And I couldn't make a dime. And I was doing all the things you're supposed to do, right? It wasn't until my mentors taught me these simple edges that my trading started to become consistent. So this is strategy number 4. I just shared with you the very first 2 rules, these 2 edges that change the way I trade, and hopefully they'll be able to change the way you trade as well. Remember, trading is simple. Just the same way my mentors taught me, I'm telling you, trading is really simple. It's the individual trader who makes it more difficult than it has to be. You know, I remember when I was on the floor, I was looking at 3 to 4 screens. I had all these newsletters. I was looking at numbers of indicators. I had maybe about 40 or so indicators plotted on the screen. It was just so overcomplicated. Right now, I only have 1 screen. I don't look at any news. In fact, I stopped looking at news events some 4 decades ago. If you want to look at news, you're more than welcome to, but news is not incorporated in any of our techniques or methods. I don't go to chat rooms or trading rooms. We don't have that because remember, we're an educational company. We feel those things are hindering your success. They're more crutches. We don't want you to base your trades off of what we do. We want to teach you so that you can ultimately go on your own and make your own decisions. That's how you become a consistent trader. Okay, so let's recap. Strategy number 4 highlights. It's a pattern recognition strategy. I just gave you the first 2 rules of the pattern. It's designed for traders looking to catch momentum in any time frame. It makes no difference. And oftentimes it will generate these setups before the momentum is even shown on the chart. And then lastly, you can apply it to all markets and all time frames. It makes absolutely no difference. Now the advantages to this is extremely consistent, meaning that if you do have a few losses, most likely the losses will be made back up within the next 2 or 3 trades. It makes you a part of the process. Only 70% rule-based. The rest is for you to decide how you want to exit, how you want to enter, how you want to place your stop. We have upwards of 7 different ways to do that, and we teach you in the class. And it's designed to be as simple as possible. You have the first 2 rules. You saw how simple they were. It gets even more simple after that, okay? So ask yourself, as we conclude here, do you think this strategy can help your trading for the remainder of 2023? If you can believe it, we're already halfway through the year. Now, most traders, myself included, when I first started trading, you'd make yourself all these promises and all these goals that where you wanted to complete the year, right? And in January, you'd say, okay, this year, I'm going to make so much a day. I'm going to make so much a month. By the end of the year, I'll have this for that dream vacation I wanted, or maybe that addition on the house, or maybe just to have some extra income coming in, right? And I can honestly say that most likely you're nowhere near where you thought you'd be in January. That's okay. That's the majority of traders. They fall into that trap because once again, we've been taught to listen to the wrong things. I truly think strategy number 4 can help get you back on track for 2023 and help you close the year strong. So because of that, we have a great offer, our association with Metastock today. We have a great offer for all of you attending and watching today's educational presentation. We're going to offer you our most consistent strategy special. This is strategy number 4. You're going to get instant course access. You'll get detailed instruction. Remember, we're going to share with you all of the different variables for entries, exits, and stop placements to help you make your own decision. Let's say you're the type of trader that doesn't like to take a lot of risk. Well, then you'll use a certain stop placement that we teach you. If you're the type of trader that likes to exit and get out quickly, we'll teach you how to do that. If you're the type of trader that likes to track a trade and make sure you're in as long as possible, we'll teach you how to do that. So ultimately, you can define how you want to trade the setup, all right? You'll get the automatic buy and sell arrows, the complete course rules, okay? You'll get all the course rules that you can apply to any market and any time frame. And by becoming a student of mine in strategy number 4, you'll get educational correspondence. All of you will get my personal email address where you'll be able to contact me whenever you like. In the middle of the night, I've gotten emails in the middle of the night I've answered. Prior to the market opening, after the market closes, on the weekends, it makes no difference, and we can discuss any issues you may be having, okay? Now, if you're not convinced yet, after all the different snapshots I shared with you, let me share with you something that happened very recently, okay? In fact, I took this snapshot just about 2 or 3 hours ago. This was in Joby Aviation, okay, JOB1. Looking at this, this was in May coming into mid-June. We see that we were originally going up. We had a really nice, strong upward move. And this is a really inexpensive $7 stock, okay? Let's say you were lucky enough to purchase this, but then look what happened here. Looks as if we topped out. In fact, once again, if you're a candlestick trader, you would have noticed a bearish engulfing pattern. So let's say you saw this and say, hey, this is a good chance for me to exit with a profit. So you exited, all right? And then you just say to yourself, okay, thank you for that, and I'm going to get out, and I had a nice little gain there. I'll look for the next one. This is the beauty of strategy number 4, because what's the first thing we teach you? First thing is to find the overall trend direction. And even though we've been selling off, the market is still telling you, not me, the market is still telling you the overall trend is still up because the majority of prices are still above the 50-period moving average. That's what we call our buy-sell line, telling us whether we should be a buyer or a seller. So the overall trend is up, okay? So we shouldn't be looking to sell anything. We should be looking for buying opportunities. And we're looking for bars that close in the top 25%. We have a number here, one here, another one here, and here, one here. So they're all telling us that the short-term trend is up. But none of them met the requirements of strategy number 4. Now look at this bar right here. Even though it's a smaller bar, it closed in the top 25%. And on top of that, it met all the rules of strategy 4. So yesterday, a buy signal was generated in JOBY, Joby Aviation. Okay, so you could have decided how you want to enter. You could have purchased puts. You could have purchased calls. You could have bought on the close of the day. You could have opened, wait for the stock to open and purchase today. But look what happened. This was taken roughly about 3 hours ago. And I believe, I checked it right before we started today, actually it closed even higher than this chart example. So when we say these patterns and these setups happen over and over again, we're not lying. These happen all the time in any market, in any time frame. And as I said, this just was a setup that happened yesterday. So it's too bad that we had to give this presentation today. Had we done it last week, you may have been able to take advantage of this buy setup, knowing all the rules and how to trade this. But these, once again, these setups are happening over and over again. And it's no wonder why, I've been trading strategy for over 46 years. This was the very first method that my mentors taught me, and I continue to use it to this day. And if you don't really, if you're not really committed enough to become a student of mine in strategy number 4, go use those 2 edges I shared with you today. Go back and look at your last, let's say, 5-10 trades. I can almost guarantee you that the reason why you had losses were because you were out of sync with those 2 simple edges, okay? I can almost guarantee you that. Once you learn how simple trading can be and how consistent it can be using these edges, you'll really want to take advantage of this great offer, okay? All right, so let's break it down. What's the special offer we have for you today for strategy number 4? Well, the normal price of strategy number 4 is going to be set at $5.99. Now, in and of itself, that's still a very inexpensive price for all the examples I just shared with you that happened in the last month. But we're going to discount it today and not charge $5.99. But the special discounted price is $4.99. You're going to save $100, okay? This is still an extremely inexpensive cost for something I've been trading that has backed me up and sustained me now for 46 years. For less than $500, you can have something I've been trading for over 4 decades, okay? But remember, this is for a limited time only. So this is not something that's going to be extended throughout the year. This is for a limited time. Take advantage of this great, great offer, okay? As I said, take charge of your trading for the very first time. Become a student of mine in the strategy number 4 course. Now here's how to take advantage of that great offer. Contact Metastock. Jeffrey and all the people there at Metastock will be happy to help you. That link you see right there is the link that would take you to the info page for strategy number 4. Also, you can sign up online if you'd like. Or if you'd like to speak to someone about signing up, you can contact them at area code 800-882-3040. Now, I'm going to leave this information up here. You want to copy it down or copy and paste that link. And I believe Jeff is also posting it also on the chat box or the question and answer box. But
a few questions for you. If you do have questions, post them in the YouTube channels or in the chat right here. We have a question from Steve, but if you like that name. But he wanted to know, I'm a fairly new trader. What advice would you give to somebody that's new to trading?
Well, these 2 edges are probably the best advice because once again, when I was trading on the floor of the exchange, even though I had access to information that other people didn't have, that was coming in much quicker, stuff on coming over the news wire, and seen it on, at the time, which we thought were high-speed computers that most people didn't have access to at home, it really didn't help me. All the things that I had been taught really didn't help me. And this, just my opinion, these first two edges can help you tremendously. I mean, I tell friends and family that often say, well, listen, Steve, I'm not a trader. I don't do, I know you teach, but I can't do this for a living. But how could you help me just for looking for things for my IRA, for my 401k? I said, well, listen, anything you're interested in purchasing, just make sure it's above the 50-period moving average line. That's all you want to do. Get a chart and make sure it's above the 50. And then make sure if you're looking to buy it, that the bar you're thinking about buying it closes in the top 25%, because that's telling you that both the short and the overall trend are in sync. And those two things are great advice just for any beginner. And like I said earlier, even if you're just new to trading, but if you've been trading for maybe a couple of months, or look at your last couple of trades or ideas you had for trades. If you're buying below the 50-period moving average and selling above, you really won't have that much consistency as opposed to the opposite way of trading. And so those are the main things the main advice I would give anyone is that. And also on top of that, make sure you have enough capital too. I mean, so many people come undercapitalized, they have maybe $500. There are some issues you can trade with that little money, but I would just say the very first thing you want to do is not use your money, is to paper trade and just practice. I mean, think of any hobby, think of any endeavor, any job or any career. There's always some form of a practice period. Think of any athlete. They never just start the season fresh, just walking in. There's always some practice. There's summer session, or there's a practice season. All right. It's the same way with actors and actresses. They always have rehearsals. All right. Why would trading be any different? But most traders, excuse me, think that, well, okay, I read the information, I'm going to start trading tomorrow. You have to do the exact same. You have to paper trade and practice. So that's extremely important as well.
All right. Thank you. That's a good answer. Mari O from GoToWebinar wants to know what other charges are there? Is there like a platform fee? I can talk a little bit about that, Steve, if you'd like. I can take that.
Yeah, by all means.
So just as Mari O, I believe you've been on the channel before. I think you've used Metastock before. And as long as you have Metastock, there's no additional charges. This includes everything. If you don't have Metastock, I'll just tell you a little bit about Metastock. Metastock's been rated #1 in its price category by the readers of Stocks and Commodities for 30 years in a row. There is a fee for that platform. It starts at like $69 a month here in the US. If you want to try this package, what we will do is we'll throw in a free trial to Metastock with your purchase. So you can try out our award-winning software. It's been rated #1. If you decide you want to keep it, prices start at $69 after your first month, but there's no charge during your first month if you want to try. There's no additional charges for that. So Charles has another question that I'm going to let you take, Steve. He wants to say, often the 50 SMA will be different on different timeframes. How do you decide which timeframe is the correct one to trade?
That's a great question. It's probably one of the most common questions I get from prospective or even new students. It's our belief, it's my opinion after trading for over 4 decades, that there's no reason to look at different time frames. In other words, what we teach is only trade the chart that the signal is generated on. Meaning that if you're looking at a daily chart, the way I showed you that chart of JOBY, and price is above the 50, and a signal is generated on that daily chart, that's the only chart I'm looking at. I really have no other interest in what the weekly is doing or what the hourly is doing, because they will give different setups, and that's okay, because everything has different parameters. You can have a successful trade in 2 different time frames. One can be buying and one can be selling, because they have different parameters. So our philosophy is to only trade the chart that you have the signal being generated on. So if you have a weekly chart and price is below the 50-period moving average, and you have a daily chart and price is above the 50-period, but the signal is on the daily, then just trade that. Remember, there's no real reason to overcomplicate things. If you know the overall and the short-term trend by using these 2 edges, there's no reason to look at another time frame, in our opinion.
Okay, cool. Good answer. Another good one. I like this question a lot, Steve, because it kind of it's one that is a question I think a lot of us look at. And so just to kind of let's say that you ran a scan in Metastock, you have a list of stocks that have a pattern. Are there certain things that you look for in a stock that would kind of set one pattern apart from another?
Yeah, that's a really good example. And we share this with our students, a couple of things. Let's say you get a buy signal in a number of, say 10 stocks, okay? What we tell students is, especially in the beginning, as you get more experienced, you can use your own insights, what you want. But we always tell students, let's say you get a buy signal, look for the signals that have a strong upward slope in the 50-period moving average. That oftentimes can tell you of strong momentum, okay? So rather than just having a flat line, I'm not saying that if you have a flat line, it won't be successful. I showed you a number of examples that were. But oftentimes, if you have a very strong upward slope for a buy signal, that's a highly consistent setup. The same works for a sell signal. If you have a strong downward slope and you get a sell signal, that's a good sign as well. That's just one of the techniques. Another one we teach our students is in the beginning to take those setups that are close to and or touching the 50-period moving average. Because oftentimes, I'm sure a number of traders have seen that price will come down to that moving average and then bounce. So let's say price has come down to the 50-period moving average or close to it, and you get a buy signal. Well, that's another highly consistent setup. So rather than being very far away from the 50-period moving average, we tell our students in the beginning while you're learning to take those setups where the signal is very close to or touching the 50-period moving average. Those are two good things to look for.
All right. Guess what? That's the end of the questions.
Yeah.
Other than a few, I wanted to know how to get in touch with us. What's our contact details? So you can actually call us at 800-882-3040. You can chat online with us at metastock.com/sales or sales chat, yeah, for chatting, or you can email us at sales@metastock.com. So there you go. Okay, that was the question. I wanted to show really kind of like how the product's integrated and talk a little bit more, if you don't mind, Steve.
Sure.
Okay, cool. Let me go ahead and kind of grab the presenter role here, and we'll go ahead and show my screen. I just kind of want to show this, how this is implemented in Metastock. And yeah, all right, very cool. All right, cool. So as you can see, I've got a chart of Meta up. Meta's been a very, very good running stock. And one of the things that you're going to be able to see is every time you get a setup signal, it's going to be able to identify this on a chart for you. So from that perspective, go ahead and do this real quick. Make a change here. Every time that you see an actual buy setup, it's going to show up on your chart. It's going to be automatic. It's going to kind of show up there for you. There's a couple of things that are kind of well implemented in Metastock that I really, really like. So the first one I'm going to show it, and it is actually one of the things I like about Steve's setup is it's very, very straightforward. You're looking for kind of, I mean, he kind of told you a lot of what's included in the rules, and you can see exactly when this is happening on the chart. One of the things that we have in here in the Metastock platform is what we call our expert commentary. I'm just going to open that up and kind of give you an idea what that does. When I open up that commentary, you'll notice that there's an arrow that points down right here at the very last bar. And there's not really a lot to report here. And so what I'm going to do is I'm going to kind of jump back and kind of just show you the advice. Like if we run an exploration and find a bunch of patterns today on stocks, it's going to have some commentary in here that kind of gives us some helpful advice and feedback in terms of what we can do. So right here, what it's going to say, Steve's commentary for this strategy is, and I'm trying to, I can zoom in, but it's not, okay, there we go. Buy setups. According to the rules of this pattern recognition method, strategy 4 has generated a setup bar to go long. Enter to buy on the next bar only if the price trades one tick above the high of the setup bar. So what it's saying here is we have a trade. If we're interested in taking advantage of that trade, our simple entry method would be to wait for tomorrow. And we're going to look for a high that goes up above. So very, very good. One of the other things that we do really, really well, if you're not familiar with Metastock, is screening. So and I'm going to show you how that works real quick as well. It won't take very long. I'm going to go ahead and open up what we call Power Console. I'm going to go to the Explore tab, which is explores the word we use here at Metastock for scanning. I searched for just the number 4 so we can find strategy number 4, and I ran a real quick exploration on the S&P 500. In fact, I think it's still open. Actually, it is still open. Ran a real quick exploration on the S&P 500, the NASDAQ 100, and the Dow constituents. So there's about 526 stocks. Before I kind of just show you the report, I want to let you know, because right now we have Christian who's watching from Rome. I think I've met Christian before, in fact. But we get a lot of customers that are in Italy or India or Australia or you name it. You can use this exploration for any market that you want. When I set this up, I said, well, let's scan the S&P 500, let's scan the Dow. And certainly if you're a US trader, that's something that you could do. But when you're setting this up, you can scan just about anything you want. Like, so for example, if you're an ETF trader, you just want to be able to scan the ETFs. There's a list for that. You can come in here and all of the ETFs are going to be listed. If I want to scan all of the optionable stocks and see a list of everything that has an optionable entry, the stock that has an entry opportunity that's optionable, there's a list for that as well. But if you're here and you're joining us from India, welcome. You can come in here and there is the Indian Stock Exchange, the National Stock Exchange of India, the Bombay Stock Exchange. If you're interested in applying this to futures markets, we get our data from Refinitiv, and they cover, like if you just look at this number right here, 321,000 instruments. So you can scan just about anything that you want anywhere on. I did run that scan already. It's ready to kind of show to you. It did go through 526 stocks. Again, that was the S&P 500, the NASDAQ 100, and the Dow. And one of the things I want to say is just by running that, it rejected 86% of the stocks. And as a trader, I like rejection. You know what I mean? I'd like to see stocks that, what I want to be able to do is focus on the stocks that have an opportunity. So in here, this is a list of stocks that have an opportunity either on today. If it has a 1 in this column, the long column, it'll have a setup today. We could open it up. We could watch it tomorrow to see what happens, or on the next bar. This P long, because what we want to do is we want to wait for that penetration of the high that we just talked about in the commentary. If I start by this P long, that means it had a long on the prior day. So right here on AMD, it had a long yesterday, and I can kind of go in and look at that and kind of see if that has been filled. And I can do that at any point. So there you go. Metastock, Texas is not a country. I'm sorry, Greg. All right, anyway, so the same is true with shorts. Shorts would be a setup that happened today. The prior shorts would be anything that had a setup yesterday for a short position. So very, very easily, you can either see everything that's set up tomorrow if you're maybe making a list of stocks you want to watch for tomorrow, or you can see it if you're in the middle of the day, you're running your scan and you want to see the stocks that had a setup yesterday to see if they're triggering in today. You can do that as well. And it's all on the same exploration. You run it, it's going to show you all of the results. So I love the ability to get Price Headley said it best, I think. He always said, I always want to be able to step over the smaller opportunities and focus on the stocks that have an opportunity. And this is something that the scanner really does a great job. It's allowing you to just ignore the noise. Let's focus on the stocks that have an opportunity, and we can ignore 85% of the noise that exists in the market. So there you go. Let's go ahead and kind of go back in here. The strategy number 4 is a methodology that Steve's been talking about for a number of years. The thing that I actually also like about this is it's got the exploration, it's got the expert advisor, it's got the layouts, everything you need to kind of run it. But it includes a lot of training with Steve. So if you listen to Steve today, one of the things I really, really like about what's included is all of the training that he provides as part of it. And I have a list of the videos here, but one of the things that I've always talked about, I've always thought about Steve is he's very, very easy to understand. When he talks about something, he tells you exactly what it is. And here are the trading modules that come as part of it. So I'm probably not going to read all of these, but he talks about the rules. He talks about the buy and the sell line. He talks about entry techniques, exit techniques, stop placement. I'm not going to read them all as I read them all. Exit techniques. All of this training is available. It's in a portal that you can access. It'll be available within 1 business day of your purchase, and it's just something that you can log in and watch. And I love the fact that this much training is included, because one of the things Steve does a really good job with, and we've been doing sessions with him for years and years and years now, is I think every time he says something, I understand what he says, and it makes sense to me. And so to be able to offer a package that has so much really, really good training right out of the box, I think it's great. So the pricing on this normally is $5.99. Here at the event, it's going to be $4.99. And to take advantage of it, you can give us a call. You can call us at 800-882-3040. You can order that online if you want to at metastock.com/specialist trading A. And you can also chat online with us at metastock.com/chat. So there you go. I do want to say thank you again for Steve for coming and spending some time with us and developing the platform out. For those of you that watched today or in the future on our YouTube recordings, I appreciate that. Thanks again for coming. We'll see you again real soon. And thank you again, Steve.
Thank you, Jeff. Thanks everyone for coming today. And I look forward to all of you becoming students of mine in the strategy number 4 course.
All right. Thanks, everybody.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.